Pound dollar, soft or hard Brexit? That's the main topic. So we'll begin about that. Let's begin about with the timing. So as we speak, during this week, the Supreme Court in the UK is discussing if Parliament should approve Article 50. If Parliament should make the declaration of the UK exit from the European Union. I don't see it as that important. Parliament will not vote against the voters, even if an MP is in the Remain camp or was in the Remain camp. His constituents, or at least the constituents of the whole kingdom, voted in a clear majority for an exit. So if it moves to Parliament, from the government to Parliament, I don't see that as making a big difference. It might delay things by just a bit, but not even. I see the deadline of March 2017. Everything happens in March, as well, being honored. Okay. Some, of course, wish for a cancellation, and that's wishful thinking. Again, even if at least not now. Okay, so it might have kind of a soft Brexit or an interim agreement, and maybe later, 5 years from now, a cancellation of Brexit. Maybe, but certainly not now. So the timing is still March 2017, and maybe even before that, maybe in February. Brexit style. There is a high level of confusion. We have the three ministers, Liam Fox, Boris Johnson, seen before, and David Davis, wanting a hard Brexit, but people that really matter, Prime Minister Theresa May and Chancellor Philip Hammond, are looking for a softer Brexit. What does it mean? Basically, if Britain stays in the single market, if it has access, more trade, or less. Okay, one solution is that Britain can get an interim deal, the EEA or a Norway-style deal, officially being out of the European Union, but still getting access to the single market and allowing for immigrants. That's what's pushed the pound higher in recent days. And that's different from what we heard from Theresa May in the conference. But as she said, she does not want running commentary on Brexit. So similar to Draghi, we still don't know many things. Let's move to the UK economy. So far, it's doing well or even great. We had in Q3 the post-Brexit quarter growth worth 0.5 was confirmed in the second read. PMIs are upbeat, especially services. Retail sales look good. Brits are shopping, and the employment level is very high. That means unemployment is very low. So if you look only at these figures, the UK economy is firing on all engines. There's always a but. New firms are eyeing other places. So there was this tech conference in London last week, and some venture capitalists said that London has lost some of its charm because of the uncertainty. And there are other places like Amsterdam, Berlin, and also Barcelona as hubs for startup firms. Of course, this is only anecdotal evidence so far, and employment may have peaked. If you look only at the level, if you look at the level of employment in general and the unemployment rate, things look good. But if you look at the more frequent data of jobless claims, they have begun rising, and this could be worrying. Maybe employment has peaked. Maybe there is a turning point. In any case, the effect of uncertainty is a delayed one. It's not that the economy stopped working on June 24th, the day after the referendum, but future decisions are, of course, impacted by Brexit. And this high level of uncertainty, which is mostly to blame from the government, of course, but is weighing on the economy. We still haven't seen it, but I believe that things will get worse later on. Anyway, for pound dollar, at least for now, it did find the bottom. And let's look at the pound dollar chart to conclude this segment of our special focus on pound dollar. So this is a Y chart ranging up to June. In June, we had it reaching 150 on the Brexit night, then crashing, trading in this range of just under 128 to 135 for quite a few months, and then in October we had another big fall, including the big flash crash of early October. Since the flash crash, we did trade above 120. We had an initial lower range here. Let's zoom in just a bit. We had a lower range closer to 120. I would say we had this 122, 123. 123 serves as support further above 123.80, 125.20, which is strong support. Worked nicely as resistance beforehand. 125.85, 126.60, and then we have the post-Brexit low of 127.80. These are the current levels to watch out for pound dollar, and as the wider chart shows, we have moved one trading range higher since the lows seen in October, and even two. Sorry, since we had a range for October, a range for November, more or less, and now in December we're in a slightly higher range. But note that this range is still below the range seen in the summer. Okay, and generally speaking, if you look at the bigger scheme of things, currently 126.25 from levels pre-referendum of 145, 148, it's still a huge fall. Okay, so that's our currency of the week segment, pound dollar.